Yes, people, a very happy to all of you. So, guys, we're doing this chapter called as preparation of the cash flow statement, governed by Accounting Standard 3 revised. Wonderful. Quickly tell me, people, as per AS3, you can prepare the cash flow statement how many ways? Two ways. One is using direct method, second is indirect method. Direct and indirect method, is it for all the activities or is it specific? It is specific to operating activity. So operating activity could be prepared in two ways. One is direct method, second is indirect method. All the other activities, which is investing activities and finance activities, by default only one method, direct method. Wonderful. Now, currently we are dealing with how to prepare the cash flow statement under indirect method. Please tell me, before I discuss what is operating activities, under that what segments comes, please tell me what is the overall format of the cash flow statement. I asked overall format, not inside. Cash flow from bar used in operating activity. Okay. Then cash flow from or used in investing activities. See, cash flow from or used in financing activities. Okay, how do you get the cash flows? Inflow minus outflow. Inflow minus outflow. If it is positive, leave it like that. If it is negative, put it in bracket. Then D is what? Net increase or decrease in cash and cash equivalent. Will you write net increase or decrease every time? If the answer is positive, net increase. If the answer is negative, net decrease. How do you get net increase and decrease? A plus B plus C. Now next E. Minus add opening balance of cash and cash equivalent. When I do that, what do I get? Closing balance of cash and cash equivalent. All of you know the meaning of cash and cash equivalent? Need to revise now or can I do revision after 2 class? After 2. Such a lazy goose you guys are. Okay. No, after you said I will not do it. Sorry, abhi solta. Cash means cash. ஏண்டா ரொம்ப நாளா ஒரு தனி ட்ராக்ல போயிட்டு இருக்கான் என்னாச்சு அவனுக்கு cash highly liquid last point taken highly liquid then cash in hand demand deposit with bank example of demand deposit with bank savings bank account balance current account balance fixed deposit balance in companies will you open the savings bank account no so I give that only as example only in company current account will be opened okay then cash equivalent for an item to be qualified as cash equivalent how many conditions to be satisfied 3 first one highly liquid means possibility of converting into cash should be very quick then the maturity should happen within 3 months of date of acquisition issue but date of acquisition is the right term not within up to 3 months up to 3 months we can take if it is convertible up to 3 months it is cash equivalent if it is convertible beyond 3 months it is not a cash and cash equivalent it will become your investing activities okay third condition risk in change in value should be not there so no risk in change in value or low risk in change in value if all the 3 conditions satisfied it is cash equivalent example of cash equivalent checks in hand demand deposit in hand marketable securities which has got no risk or no risk of change in value all these are the examples of cash equivalent wonderful now under cash flow from operating activity how many segments are there 5. Are you sure yes, okay cash flow from operating activity first segment is net profit before tax and extraordinary item this will be given to you in 3 forms one directly given means how it will be given in a statement format that your net profit before tax and extraordinary item is so and so. Or they'll give you the format of statement of P&L. In that there'll be multiple items. In that one item which I should focus on should be net profit before tax and extraordinary item, or net profit before tax. That should be the focus item. This is called as directly given. Directly given. Next is what? Forward mechanism or top to bottom approach. Top to bottom approach. Right? In that, what will you do? From the total income, you'll minus total expenses to get net profit before tax and extraordinary item. Third one, reverse mechanism, or it is called as bottom to top approach. In this, what is the starting point? Surplus. How do you get a surplus? Surplus of current year. How do you get it? Closing minus opening. Wonderful. With this, what will you do? Sir, in reverse, what will I do? Add equity dividend of which year? Previous year. Then preference dividend which year? Previous year. Then previous year. Current year. Then transfer to reserve. What do we get? Profit after tax. Okay, with this, what am I supposed to do? Provision for tax is subtracted. To reverse, we have to add back. So add provision for tax. Which year? Current year. Where is this information available? Either in additional information or in your P&L. Okay. Then refund of tax is already added. To reverse, we have to minus refund of tax. Which year? Okay. Then I'll get net profit before tax. Wonderful. Then add back extraordinary item. Which nature? Loss or expense in nature. Because already it is subtracted. To cancel a subtraction item, we have to add back. Then we have to minus extraordinary item, gain in nature, income nature. Because this is already included in that profit. To reverse, we have to subtract. What will I get? Net profit before tax and extraordinary item. Now, once we get the net profit before tax and extraordinary item, can I call this as the final operating profit in cash? No. Why? Because in that still non-cash and non-operating items are included. So this profit is not the final profit. This is adulterated profit. So what is my next step? Segment 2 is what? Add non-cash or non-operating expenses. Expenses bar losses. Can you name a few of them? Depreciation, amortization. I said non-cash first. Bad debts. With bad debts, one more item will come. Provision for bad and doubtful debts. Provision for discount. 11th standard topic. Provision means any provision can come, no? Then very good. Loss on sale of asset bar investment. Wonderful. Super. Next. Non-cash. Deferred revenue expenditure or advertisement expense or preliminary expenses or miscellaneous expenses. This could be in any name and form. Correct? No? Yes. Very good. That is non-operating. Non-cash, is there anything else? Check whether everything is taken care. Loss on issue of debenture. Sorry. Yes. Loss on issue of debenture is your non-cash item. Loss on issue of debenture. In this, how many losses possible? Two types. One is discount on issue of debenture. Second is premium on redemption of debenture. These are the two kind of losses. Very good. Next. That's all? Everything is taken care of? Okay. Next, non-operating. Non-operating. Underwriting commission. Then interest on debt. Any kind of debt. Any kind of debt. Every debt. All borrowings put together. Debenture. Anything you take. Bond, public deposit. Anything. Interest on that. Then anything related to finance. Bank charges while taking the loan. Bank charges. Anything that comes in finance cost. Bank charges. Or bank processing fee. Let me add this bank processing fee. See, like that, any item can be added. You have to be very careful. bank loan processing fee. See, the normal bank charges are there. No, normal bank charges that that is there in the event of payment. So that is your operational expenses. Are you able to follow? Normal bank charges are your operational expenses. Let that be in the operating activity, no problem. Here, what am I talking about? I'm talking about the bank loan processing fee. When you go for processing the loan, no. So processing the loan, the banker will charge a fee called as loan processing fee. So that is a cost which is specifically associated for raising the money loan. So it's a finance cost. It's a non-operating item. So you have to be very vigilant. Anything can come. So now this will come as non-operating item. For non-operating item, I have told you to take care of one more point. What is it? Very important point. I give a note also for that separately. You have to check whether this is paid or not paid. If it is not paid, it will be shown as a liability in the balance sheet. If there is no information about the liability in the balance sheet, which means it is paid. So either if it is paid, they will tell interest is paid, or if it is not given, there is no information on the paid related thing. In that case, interest alone they'll give. So if you feel that interest is not paid, where can you go and cross check? I'll go and check the liability. If it is not paid, outstanding interest or interest payable will be there, no, which means it is not paid. If that is also not there, what does it mean? It is paid. So you have to be very careful. So why do we need this? Because if interest is not paid, I will add back in segment 2 and leave it. But if interest is paid, after adding back in segment 2, since it is paid, it is a cash outflow of which activity? Financing activity. So you have to minus in the financing activity. So if any non-cash item, non-operating item is being paid or received, after adjusting segment 2, you have to adjust in either investing or financing activity. Interest paid is adjusted in the financing activity. Interest received is adjusted in the investing activities. Any problem here? Okay. Then less non-cash or non-operating income or gain. This is currently included in the net profit. So if any item where we have recorded as income but money is not received, why should I take it in the cash flow? But you have taken here in this. So you have to eliminate by minusing. So income item is included in this. Non-cash income is included in this. Since money is not received, we have to eliminate by minusing. Same way, non-cash expenses. From this, expense is subtracted, but money is not gone out. Hence, it is not allowed. So we are adding back to your net profit before tax and extraordinary item. Am I loud and clear? Okay. Like that, please can you give me example of non-cash income? Gain on sale of investment or asset. Next. Reversal of provision. Very good. Reversal of provision for doubtful debt or provision for discount. Next. Bad debts recovered. Very good. But bad debts recovered, what is the entry? Cash or bank account debit to bad debt recovered. And this bad debt recovered will be transferred to your other income. Does it go to other income? Or will you adjust from your bad debts? So anyways, this is pertaining to what? Operation. And since money is received, so why bad debt recovered should be reversed? Correct. Let it be. We are doing cash flow statement, boss. In cash flow statement, did I receive this money in current year? Yes. If it is included, if it is received, then let it be inflow in the current year itself. And this is a part of your operation, no? So why should I reverse my bad debt recovered? So bad debt recovered, if it is given in question, you will let that be in the cash flow statement. Where? Under operating activity itself. Where? It will be included here in net profit before tax and extraordinary item. Let it be included in that itself. No need to reverse. No need to reverse. Clear or not clear? Logic is clear? Okay. Now, next. Non-operating income, please. Non-cash, we've written. Non-operating is what? Gain, profit, interest received, dividend received, rent received. All these are non-operating. Gain, to be more honest, it is not non-cash. It is non-operating. How can I say it is non-cash? Because profit on sale of asset, money actually you're receiving, no? So it is not non-cash. Money is coming. So it is non-operating. That is the right term. So all these are what? Non-operating. So this is included in your net profit. But the right place to be included where? It is investing activity. But currently it is added where? In the net profit under operating activity. So we have to reverse here. So minus here and add back in your investing activity if all of these are received. If they say interest is earned, money not received, then what will you do? In segment 2, you will minus, but in investing activity, you will not add back. Am I loud and clear? Same point like interest paid. Now, any doubt so far? Comfortable? Now, when I do this, what will I get? This is called as operating profit before working capital changes, which means there are some more adulteration in this that has to be eliminated through my segment 3. Segment 3 says what? Add increase in current liability, decrease in current asset, and then less decrease in current liability, increase in current asset, minus. What do you get? Cash generated from operating activity. You get cash generated from operation. Cash generated from operation. Now, segment 4, less income tax paid. Less income tax paid. Income tax paid is a cash outflow. Income tax paid is cash outflow. You will not minus the provision for tax. Provision for tax means what? The provision created in current year. When am I going to pay that? Next year when I file the income tax return. For 24-25 financial year, when will you file the income tax returns? On or before 30 September. So I have time till 30 September for outflow of money. Right? So provision I will never minus. Boss, I am doing cash flow statement. In cash flow statement, I am bothered about only that tax which is paid. So this income tax paid generally is of what? Previous year. But sometimes this can also be inclusive of current year. How? In current year you pay advance tax. So here, this segment 4, income tax paid is segment 4. It does not say that only previous year tax will come. This segment is saying that whatever tax you paid in the current year to IT department, in the current year, whatever money you paid, everything will come here, income tax paid. Mostly it will be of the previous year. But current year you pay advance tax, no? That also will come. So we have question based on that also. So that you have to minus. And then add bar less extraordinary item. Sir, can you give an example for this? This is segment 5. This is segment 5. Example for this. Goods destroyed by fire. Goods destroyed by fire. You filed one insurance claim. Insurance department is giving you 10,000 rupees towards the claim of the goods destroyed by fire. He's given you the money. In the current year, in your bank account, money came. Please tell me, you have claimed the insurance for goods destroyed by fire. Goods is a part of my operation. So income tax money received, not income tax. Insurance claim money that is received for the claim that you have done for the goods destroyed by fire, theft, burglary, whatever you say, that is pertaining to my operating activity. So that needs to be added back. So extraordinary item means what? Insurance claim received. Insurance claim received should be added back. Now, one donkey is saying that, sir, it should come to investing activity. No, who's that? Assets. Now, the question what she's asking, sir, if it is asset claim received against asset destroyed by fire. Asset destroyed by fire. Asset is what activity? Investing activity. So if you are getting any claim against asset, that insurance claim received will be added where? As extraordinary item in the investing activity. So blindly money received from the insurance company or money received against the claim, blindly don't put under operating activity. Look on what item it is. If it is for asset, that will be added in your investing activity. If it is for your goods stock, then it will be added to your operating activity. So this is the last segment, segment 5. So in total, how many segments? 5 segments. First segment is what? Net profit before tax and extraordinary item. Any problem? Second segment is non-cash and non-operating items. Third segment is adjustment for current assets and current liability. Segment 4, income tax paid. Segment 5, extraordinary items. So total 5 segments under which activity? Operating activity. Will you forget this? Very good. So in last class, 24th question was completed. Which one? Everything is there in the PDF, Kana. Oh, but you will send PDF late, no, sir. அது வரைக்கும் நான் வெயிட் பண்ண முடியாது இல்லையா? Yes. Now, one point has to be also taken care of. In the current year, if any refund of tax is received, if any tax refund is received by the company from the department, that needs to be added. So less income tax paid, add refund of income tax. Now take a B photo. Yes, refund of IT, obviously previous year only. Correct. During the cash outflow. Now the question what is asking is, say in a company the advance tax is paid once in every quarter. So April, May, June. When do you pay the advance tax? When in July? 15th of July is the deadline. All of you have studied this in the tax, not it? Okay. So you'll be studying in income tax that you have to pay advance tax once in a quarter. Once in every quarter. So first quarter is what? April, May, June. When you have to pay, the due date is next month, 15th. July 15th. July, August, September. That quarter is October 15th. October, November, December. Jan 15th. Jan, Feb, March, April 15th. So in the current year, quarter 1, quarter 2, quarter 3's outflows happened. So that you will take into consideration. Quarter 4's outflow will come where? Next year. Adhe mari, previous quarter 4 outflow would have come in current year. So last year's Q4 would have been paid by April 15th of this year. So that will be taken into consideration. And quarter 2, quarter 3, sorry, quarter 1, quarter 2, quarter 3. In other words, let's say this is current year. Current year. Quarter 4's money, when do you pay? Here. So in Q1, you pay the Q4 of last year. Q1's money, when will you pay? Q2. Q2's money, when will you pay? Q3. Q3's money, when will you pay? Quarter 4's money is paid in quarter 1. Quarter 1's money paid in quarter 2. Quarter 2's money paid in quarter 3. Quarter 3's money paid in quarter 4. Quarter 4's money paid in quarter 5. Hey, next year. Quarter 5. Next year. உன்னை நம்பி அவங்க கூட வர ஃப்ரெண்ட் வராம பாத்தியா சாப்பிடுறதுக்கு அவன் முடிஞ்சான் இது கேட்டு அவன் மொபைல் எறியணும் குவார்டர் 5 வரை இருக்கு சொல்லியே கொடுக்கல ஸ்கூல்ல now clear. So now I'm not bothered about all this. Why? Because when we prepare the tax ledger, automatically when you balance the ledger, when you do a calculation in any specific manner, you will get one amount called as tax paid. So by default, all of this what I discussed, it will be automatically be adjusted by the ledger what you prepare. So consciously, you don't have to think about it. Should I take this quarter or that quarter? Because the ledger is designed in such a manner. But still, why I explained is because he asked a logical question. So I wanted to give a logical explanation why. That's why I did this thing. Otherwise, if you prepare the provision for tax ledger, here you'll record opening balance, closing balance, current year's tax provision. This will be the balancing figure. This balancing figure is automatically going to be the total tax outflow of the current year. So you don't have to actually spend your mind thinking that whether this amount is of current year or previous year. Automatically, ledger will tell you what is the balance paid. But why I gave this explanation is to understand logically, because tomorrow when you go for articleship, the same question your junior can ask, your boss can ask, your senior can ask. So that time you should be in position to apply your mind, For that reason, I gave the explanation. Is the logic clear? Not clear? Yes. One more time, should I explain? No, sir. Balaji, okay, what is your doubt? Advance tax is a concept where every company has to, okay, now let's say there's a company by name KBA Limited. April, May, June, KBA Limited would have done the business. Okay. Now, the company says, sorry, the income tax department says that whatever is the earning of this period, actual earning, and the forecasted earning of the future 3 quarters, you have to make a prediction of that. And on that, you have to pay a percentage of tax. Not the 100% tax, a portion, proportionate percentage of tax you have to pay. If your tax liabilities, let's suppose on the entire year 30%, which is coming out to be, let's say, 30 lakh, the entire 30 lakh nahi pay karna. You have to pay a part of it. How much to pay? Your income tax teacher will teach. Why? Because if the concept of advance tax was not introduced, what would have happened? The company is enjoying for full 12 months, plus the company is enjoying the money of the income tax department of next 6 months also, and paying the tax when on 30 September. Which means you are keeping that government's money with you for almost about 18 months. So working capital of the government is blocked with you. So if the government does not get the tax on time, how will it, plan its monthly expenditures or quarterly expenditures or yearly expenditures? So government ka main source of fund, the main source of revenue for government is what? One of the main source is tax. So if the government does not get tax on time, it will be very difficult. Like how you need monthly income, at least the government needs quarterly income. So they said that a portion of it you have to pay now as advance tax. If you don't pay it, we will levy interest on it. Like that, they have come out with the clause. Now, when interest will come, when interest will not come, that is an in-depth discussion which will be done by your income tax teacher. Now, his question was, sir, if I'm paying advance tax, quarter one, that is April, May, June, this 3 months tax, when am I paying? Next month, 15th. So July 15th. July, August, September. This quarter two's money, when are you paying? October 15th. October, November, December quarters, Jan 15th. Jan, Feb, March, April 15th. So he said that quarter four's outflow of money is happening when? Quarter one of next year. So this outflow, will you record in the next year or in current year? I said that you should record in the next year only. Because in cash flow statement, what am I concerned with? In current year, what inflow came and what outflow happened? Q4's outflow is happening when? Next year. So that will be recorded in the next year's cash flow. So in current year, you'll be recording quarter one, quarter two, and quarter three's cash outflows. Similarly, Q4 previous year's tax, when will you pay? In current year. So Q4 of current year, Q4 of previous year, Q1 of current year, Q2 of current year, Q3 of current year. All these 4 cash outflows happens in the current year. Am I clear? Is the logic clear or not clear? Okay. So this 4 will be recorded in the current year's cash flow statement. But I'm telling you, you need not be bothered about all this, because when I prepare the PFT ledger, automatically the balancing figure will be what? The tax paid. So all these 4 put together, current year tax, advance tax, everything put together, it will come here in this particular ledger. So consciously, I'm not bothered that how much is tax of current year and how much is tax of previous year or how much is tax of the subsequent year. I'm not bothered, because this ledger will give me one single amount, total tax paid. So that I have to take and minus it in a segment 4. That I have to minus in segment 4. Any problem? Clear with this? Now, let's go to 26. 25 was homework. 25 was homework, no? Okay, let's do 26. Calculate the cash flow from operating activities from the following information. Net profit after tax and dividend is given. What am I supposed to do with this? So take this as it is, sir. We want net profit before tax and extraordinary item. This is after tax and dividend. So this is after minusing tax and after minusing dividend. So basically, it's a kind of surplus only. So you have to add back tax, add back dividend. Okay. So this will be affecting my segment 1. Provision for tax. Segment 2. Dividend declared approved by the shareholder during the year. Sorry, segment 1. Provision for tax, segment 1. Sorry. Coming. Dividend declared or approved by the shareholder during the year. During the year, you approve the dividend of previous year. Dividend declared approved by the shareholder during the year. During the year, if you approve, then that is the dividend of which year? Previous year. So segment 1. Correct? Depreciation. Segment 2. Loss on sale of plant. Segment 2. Kind of dividend part, you will understand only when you do schedule 3. In schedule 3, about the proposed dividend in depth I discussed. Manikam. So that time you will understand. Here, I'm not discussing this point one more time. Depreciation, segment 2. Loss on sale of plant. Segment 2. Goodwill amortized. Segment 2. Gain on sale of land. Segment 2. Income tax paid. Segment 4. Income tax refund. 2 places it will come. Segment 1 and segment 4. Listen to me very carefully. Since here we have provision for tax and income tax paid separately, so provision for tax will go to segment 1. Income tax paid goes to segment 4. In some question, they will not give income tax paid. Only provision for tax they'll give you. In that case, provision for tax will go to two places. One is segment 1 and one is segment 4. Why? Because the same amount is considered as the tax paid of the previous year. When the right question comes, that time I'll discuss. I'm just giving a point here. A question will come based on this. That time I'll discuss the same point. Now, or else the same question I'll do in two ways. One, when this income tax paid word is given, like this ditto question. One same question I'll do without the word income tax paid. That time what to do? Now itself I'll tell you. Now, please add heading. Cash flow from operating activity. Cash flow from operating activity. In that, what is my first item? Net profit before tax and extraordinary item. It is not available directly, so working note number 1. Working note number 1. Cash flow 9. Net profit before tax and extraordinary item. Surplus. Closing minus opening or opening minus closing? Closing minus opening. That they have directly given, so I'm not bothered. How much it is? 1,10,000. With this, I'm supposed to add equity dividend. Do we have equity dividend? Yes. How much it is? 50,000. Any preference dividend? Interim dividend? Transfer to reserves? No. Any provision for tax? Yes. So provision for tax. How much? 50,000. Any refund of tax? Yes. So refund of tax is already added in this. To reverse, we have to minus. So refund of tax. How much? 50,000. No, 40,000. Okay. Minus 40,000. Any extraordinary items? No. So please tell me what is my net profit before tax and extraordinary items? 1,70,000. Online people, are you all with me?
Yes, sir.
Yes, sir.
$1,70,000. Okay, next. Segment 2. Add non-cash or non-operating expenses. How many are there? Depreciation, loss, and goodwill amortized. 3. What is depreciation? 20,000. In the inner column I'm recording. Next. Amortization, how much? Amortization. Amortization. Amortization is 40,000. Goodwill amortized. 40,000. Then loss on sale of plant, 10,000. Loss on sale of plant is 10,000. All put together, how much? 70,000. Then less non-cash or non-operating item, income in nature, which is gain on sale of plant. Gain on sale of land, not plant, land. Gain on sale of land. How much? 40,000 in bracket. How much? 170 plus 70 is 240. 240 minus 40 is 2 lakh. This is called as cash. No, operating profit before working capital changes. But we don't have any current asset and current liability. So segment 3 is not there. So this becomes my cash generated from operation. Less segment 4. Segment 4, tax paid. How much? 50,000. Add tax refund. How much?
40,000.
40,000. How much? 1,90,000. You must be having a doubt here. Sir, if tax paid should have been subtracted here, then why did you add here? This should be one doubt. Correct, no? Second, the refund of tax, what is supposed to be added here? If it was actually supposed to be added only, then why did you minus it here? Why didn't you let it be inside that itself? Correct, no? Same goes with extraordinary item also. So extraordinary item, you're telling reverse here, and you're telling that extraordinary item, please again reconsider here. Why? Yes. Now let's come one by one. Now here in segment one, when I'm saying extraordinary item to be reversed, why? Because extraordinary item, when I record in my statement of P&L, it is an extraordinary item of all the activities put together. For example, during the year, let's say there is a fire happening. In that, stock also got destroyed, asset also got destroyed. So for stock, I got 1 lakh. For asset, I got 50,000. So total how much I got? 150. So when I reversed 150. Correct? The claim what I got added. So in segment 1, to cancel the addition, I reversed it. This is insurance claim received. 1 lakh of the goods, 50,000 for assets. Now, why I'm cancelling this? Because in this is also included, which is of investing activity. So what am I doing? I'm adding totally, and I'm minusing totally here and adding back only 1 lakh rupees, which is pertaining to the stock. Remaining 50,000, where will I add? In the investing activity. Are you clear with the extraordinary item? So extraordinary item in the P&L list of all the items put together, all the activities put together. So we cancel all that. Again, in the cash flow statement, whatever extraordinary item is pertaining to whatever activity, that alone we will add and minus one more time. Clear at this point? Now, similarly, refund of tax. See, tax we pay on two things. One is the business profit on the operations. One is on the capital gains. So this refund might be pertaining to what? Both business and capital gains. Right? So we reverse on the whole and add back. If the refund is towards the business profit, we'll add back in the operating activity. If the refund is towards the capital gain, then we'll add in your investing activity. In real life, it is very difficult to segregate because IT department will never say this is refund for operations or investing activity. So by default, in that case, we take it to the operating activity itself. Am I clear? And third, provision. See, provision is what? Provision is what? Tax expenses recorded, but amount not paid. There's no cash outflow as such. In segment 4, what am I considering? I'm considering the cash outflow. What did you consider while calculating this? While calculating this net profit, what was considered? Provision was considered. So to cancel the impact of provision, we are adding back the provision, and what are we reconsidering? Tax paid is considered. Because in cash flow statement, I'm bothered about the tax outflow, not the provision. Is the logic clear or not clear? Now, can I go forward? What is the answer? Final answer? 1,90,000. That is cash flow from operating activity. Let's cross check the answer. 190. Cash flow from operating activity. Easy. Now imagine same question. Income tax paid is not given. Income tax paid 50,000 is not given. Only provision is given. Okay. Now understand this concept. Listen to very carefully. Keep your pen down. Previous year, current year. Yes, whatever income you earned in the previous year, on that, can you approximately calculate your tax? Yes. So prudence concept says that provide for all your expense and losses. So provision is created. Provision is created. Why? Because first condition for provision is what? It should be a possible obligation. Second, there should be an outflow of economic resources. An amount I cannot exactly calculate, but I can reliably calculate. All these three conditions satisfying. Because this provision for tax, what I'm calculating, I'm using the estimates and reliably I'm able to calculate. Whatever calculation I'm doing here, provision, this is somewhere near to the tax amount that I'm going to pay. Because we are doing a more or less 90% calculation properly. So we can reliably calculate it. Second, there is outflow of economic resource. It means whatever provision you're creating here, there is an outflow of that is going to happen in the upcoming year. And you have an obligation also. Why? Because the moment you earn the income, you have the obligation to pay the tax to the government. And the moment you register profit, you have the obligation to pay tax to the government. So all the three conditions satisfied. Hence, provision needs to be created in the current year itself. That is, in this year itself, the provision needs to be created. Am I clear? So let's say you created a provision of 1 lakh rupees. Please tell me in the previous year, what would have been the entry for creating the provision? P&L account debit, because this provision I'm going to record in P&L. This provision is going to reduce my profit. Why? If my profit is 5 lakh, in that I'm going to pay 1 lakh to government. So how much is balance remaining? 4 lakh. So here, by recording the provision, is my remaining profit increasing or decreasing? Remaining profit decreasing. Profit is what balance? Credit balance. To increase profit, credit. To decrease profit, debit. Hence debited P&L account. This money, did you pay now? Are you paying now? If you're paying now to cash, to bank. When am I paying? Sir, next year, somewhere in the month of July, August, September, I'll file the income tax return. That time I'll make the payment. Now you're not making the payment, no. You're making the payment in future. Anything that I pay in future is liability. To create liability, I have to give a credit. So two, provision for tax. 1 lakh, 1 lakh. So this 1 lakh is subtracted from the current year P&L. That is from profit before tax. Whatever is the amount from that minus provision for tax of current year. 1 lakh is subtracted. Correct? So this impact is coming here. And this liability is going where? In that year's balance sheet. In short-term provision, 1 lakh will be shown as current liability. In current liability, under short-term provision, you will show this as short-term provision 1 lakh. Any problem in this? Do you agree with this point? Now, next year when I come, in the beginning of next year, if I open provision for tax ledger, if I open the provision for tax ledger on 1st April, 1/4/24, on 1/4/24, I'm opening the provision for tax ledger. In that case, what will be the data? 1/4/24 by balance brought down. How much? 1 lakh. Now, I'm going in the chronological order. After 1/4, what is my next stop? Sir, my next stop is on the date of filing income tax return. Let's say on 31st August, we have filed the income tax return. On that date, what will you do? Sir, you'll make the payment. You'll make the payment. What is the journal entry for making the payment? Whatever provision you've created, that you have to reverse. So provision for tax to bank. 1 lakh, 1 lakh. So on 31st of August, to bank 1 lakh rupees. Any problem? With that, my ledger is closed. Then what happens? Priti, you come at the end of the year. At the end of the year, what do you do? At the end of the year, what do you do? Same like previous year. Again, you have to create a provision. Again, you have to create a provision. So when I create a provision in the current year, what will be the entry? P&L account debit to provision for tax. 1,50,000. 1,50,000. So what will be the posting? On 31/3/25 by P&L 1,50,000. Did you pay this money? No. When will you pay? In future. So you'll get a now balance carried down. To balance carried down is how much? 1,50,000. And what is the brought down balance? 1/4/25. Balance brought down 1,50,000. Where is this balance coming on? Credit side. So this becomes what balance? Credit balance. Whenever the balance brought down comes on credit side, it becomes credit balance. All the credit balance will travel where in the balance sheet? Liability side. So in current year's balance sheet, short-term provision is going to be how much? 1,50,000. What is the previous year provision? 1 lakh. Are you able to understand the presentation? Similarly, this 150 will be subtracted from your, what was the current year's profit before tax? From that minus provision for tax of current year, which is how much? 1,50,000. Are you clear with the presentation?
Previous year, sir, we created
Previous year, yes, provision created.
1 lakh, sir.
Yes.
Suppose, for example, still we are paying tax like 90,000, sir.
Now, wait. This amount I can pay more, less. That is the next adjustment. Now I'm keeping this adjustment very simple because I want to explain one concept here. I will come to you after this question is done. In this, if you have any doubts, please ask. Twisting of question, I'll automatically do. Now, in question, two things could be possible. Like if you see in this question, what happened? You are so lucky. You are so lucky that they said that provision is so much, income tax paid is so much. They gave you the information directly. So always people, whatever the provision is created in the current year, no, this is that provision. This always goes to your segment 1. And tax paid is an item which will always go to your segment 2. So when you give, or when the question gives you this information directly, you are so blessed. Sometimes it so happens that this question will not give you the information on the tax paid and the provision created. Instead, what they will give you? They'll give you only opening balance and closing balance. They'll give you only opening balance and closing balance. Now, there's a question. They've given the balance sheet to you. In the balance sheet, short-term provision given. This is current year, this is previous year. Previous year, 1 lakh. Current year, 150. That's all. How much is tax paid not given? How much is provision created in the current year? Nothing is given. Now, what are you supposed to do if a question comes like this? I'm discussing one case possible here. I'm telling you a scenario where one is this question, where the question told you so much is tax paid, so much is provision created. Like halwa, they've given the answer to you. So automatically they can put the data in the segment 1 and segment 4, game over. Now I'm talking about a scenario where they are not giving you halwa. They are asking you to make halwa. Means what? Only opening balance and closing balance is given. How much tax paid, how much is provision created in current year, no information is given. Now what will you do? Always, whatever is happening, have the habit of preparing this provision for tax ledger. Always open PFT ledger. By balance brought down how much? 1 lakh. What is this 1 lakh? Previous year provision for tax. Means provision created in the previous year. Wonderful. And what information I have? To balance carry down 1,50,000 I have. No other information I have. Now what does it mean? It means that, so last year I created a provision. Last year I created provision, and that money when am I paying? Sir, in current year while filing returns I would have paid. Since there is no information how much tax is paid, we assume that whatever provision you have created, entire money is paid. That is the best assumption that I can take. See, assumption, anything I can take. Sir, why can't I assume that 2 lakh is paid? Why can't I assume that 30,000 is paid? Arey Baba, you can assume whatever you want to assume. But our assumption should be logical. And our assumption should be best of the all assumptions. So as per your logic and concept, what do you think is the best assumption? Sir, whatever provision is created, full 1 lakh is paid is what is the best assumption I'll take? Which donkey will take the assumption that, no, I will assume 3 lakh is paid? Who gave you the information that extra 2 lakh is paid? No, I'm assuming no, because I'm having common sense, anything I can assume. So when you assume also, there should be a logical reasoning behind it. So what is the best logical reason? You created a provision of 1 lakh. If no information is given about the tax paid, what is the best assumption you can take? Whatever provision I created, fully paid. So my two bank is how much? 1 lakh rupees. So this will go to where? In cash flow statement, where will this go to? Segment 4. Clear? Now you'll have a balancing figure here coming. What does it mean? 1 lakh provision created, 1 lakh paid. Ledger closed. Still I have a closing balance. How do I get a closing balance? Current year provision, 1,50,000 rupees. So by P&L 150. So this will go where? In segment 1. Any problem in this? This will go to segment 1. Any difficulty in understanding this point? Clear at this point? Now, first type of question was, they gave you provision for tax of current year and tax paid. I'm telling you different permutation combination possible. Tax paid is one combination. Second combination, they gave you opening balance and closing balance. No information on tax paid or provision. This is second possible information. Third possibility is what? They will give you only information on provision for tax of current year. No information on tax paid, opening balance and closing balance. Oh my God. Out of the 4 things, 3 information not available. Only 1 information is available. Are you able to follow? Only provision for tax is given. How much is given? 1,50,000 is given the provision for tax of current year. That's all. Nothing else is given. No opening balance, no closing balance, no tax paid. Now what will you tell? Now, provision for tax. What they said? Current year provision for tax they gave you. By P&L how much? 150. Now, you have to ask yourself a question. Is this the business started in the first year? If this is the first year of the business, obviously previous year tax, nothing will be there. If this is my first year of doing business, where is the question of previous year provision? In that case, previous year provision is 0. But imagine this is running business. Last year also we were doing the business, but no information on that. So we presume that, we assume, see, we have to assume, best assumption. What is the best assumption? We assume that in last year also same provision we created, which we created in the current year. What am I telling now? I am telling that there is a business which has been running for several years. This is my current year. Okay. Previous year provision they should have given. They did not give. Opening balance not given. Closing balance not given. Tax paid also not given. What have they given? Only current year provision. So how is it possible that if a company is doing the business previous year and tax is not done? If it is into loss, it will tell you, boss, we were into loss. So no provision created. Because for loss, you never create any provision. Provision is created only when you have a profit. You create a provision. Provision means what? You're promising the government that I'll pay you the money. When will you promise? When you have the money. When you have the profit. In case of loss, will you create a provision? No. Now here in this question, provision for taxes given for current year. Previous year is not given. So you will not think that, so previous year it is not given means previous year would have been a loss. Hence it is not been given. Like that you will not assume. You will assume that whatever the provision is created in current year, no, same provision would have been created in the previous year. So provision of previous year is how much now? 150. Closing balance of previous year is how much? 150. Opening balance. So balance brought down is 150. So previous year provision 150. Current year provision also 150. Previous year's provision you pay in middle of the year. 31st August, 23rd July. Correct? No? You make the payment. What is entry? To bank. How much? 1,50,000 rupees. And what is my closing balance? 150. So using this one data, you made 3 derivations. Any problem? So in case if only current year provision is given and no other data is given, we assume that the current year provision was the same provision created in the last year, provided there is no information about the loss of the last year, provided this is not the first year of the business. In that case, I can make that assumption. If it is first year of the business, can I assume that no, so previous year also we created the same provision? Can I make that assumption? Not possible. Am I loud and clear? Kaushik, you're taking something to digest. What is the problem? Okay, what did I say now? Current year provision is given. Current year provision is given. I'm assuming that whatever provision is created in current year, the same provision is created in previous year. 2 things you have to check. Current year provision, when it cannot be previous year provision. If the business is started only in current year, previous year provision not possible. Or second possibility, when the previous year provision is not possible, when previous year there was a loss. So in these 2 cases, I cannot have previous year provision. So you have to check in the question, whether the question is saying we are in the first year or not. If we are in the first year, previous year provision will not come because previous year no business, no profit. Or the question will tell you previous year there is a loss. In that case, will you have the opening balance here? No. So in case you are in the first year of the business, or in case the previous year is a loss, previous year provision will not come. So your assumption that previous year provision is also 150 will not be applicable. Previous year provision also is 150. When it will be applicable? When this is a running business, continuous business, and provided previous year we had a profit. When will I assume that current year provision is equal to previous year provision? When first condition, it has to be a continuous business. Second, previous year also there should be profit. Then it is assumed that whatever is current year provision is the same provision of previous year. Logic clear or not clear? So now here if you see, using this one data of 150, I got 3 datas. Now please tell me which item will go to which segment. This 150 provision will go to segment 1 and this 150 will go to segment 4. Both are same or different? Both are different. This is current year, this is previous year. Both are different. Amount is same, but emotion, feeling here is different. This we already discussed in 12th. Again, I'm repeating one more time. Tell me now, what is your doubt? Any doubts here? Yes, boss. Correct. End of the year only you create provision, no? Every quarter you don't create provision. Every quarter you're paying advance tax. So advanced tax sum, there's a different level of difficulty that I'm not including here. I'm only teaching you provision for tax. Now, provision for tax with advanced tax is a different level of question that I'll discuss in the upcoming classes. Today, my focus is only if PFT is given, what to be done. What question you are asking? Sir, with this, if advanced tax is there, what to be done? We have question based on that also in ICA module. But that is all advanced level. If basic level is not clear, advanced level you will not understand. That's why I'm spending too much of time doing the basics. In this, if you have any doubt, please let me know. So now the third condition is that provision for tax of current year is given, but no information on tax paid or opening balance or closing balance. In that case, how do you calculate? This is how you calculate. Any problem in this? Now, whatever I'm noting down here, first, second, third case, all the 4 cases or 5 cases, what I'm creating now, I'll make small examples of that in your summary notes I'll provide you. So during the revision, it will be handy. Okay. What is the fourth possibility? Think of the fourth possibility. What did you say? Tax paid is given. Only tax paid is given. Tax paid is given. No information on tax provision, opening balance, and closing balance. Same thing. Now they have given you this 150. This 150 is given. This 150 is all missing. This 150 is missing. So this is nothing but opening balance. And current year provision is not given. Means we are assuming that whatever provision is created last year, same provision is created in the current year. And closing balance is 150. Previous case, this I gave, this I did not give. In current case, I gave this I am not giving. Any problem? What happened? Nothing I gave you. Previous case, in previous case, I only gave you 150. That's all. Yes. I said in question only current year provision for tax is there in the previous case. So first question is what is previous year provision? If nothing given means previous year provision also same 150, and that is paid 150. Opening and payment both are done. Ledger closed. Current year provision, no information on the payment. So 150 will be the balance carried on. So all the 3 we calculated in the previous case. In the current case, what I'm telling is they have not given you any of these information. They have told you tax paid is how much? Tax paid is 150. Tax paid is 150. How do we make the payment in current year? Only if the provision created in the previous year. How much is provision created in the previous year? Same amount what is paid. Ledger closed. Current year provision information not given. So you will not create provision. Huh? You have to create provision. What amount? Nothing given means same amount. Closing balance is how much? Same 150. So this will go now where to segment 4. This will go where to now segment 1. Any problem? 4 cases done. In the questions, it's not even there in ICA module. Out of my interest, I'm sitting and teaching or blinking for this itself. The question what is there in your ICA module is all next level question. Tell me what doubt you have. I'll go slow, no problem. அவன் கேக்குறான் சார் ப்ரொவிஷன் கண்டிப்பா கிரியேட் பண்ணி அவனப்பா விட்டுருக்கான் ஒரு 3 வந்தா கிரியேட் பண்ணு இல்லைன்னு விட்டுறலாம் அப்புறம் கரெக்ட் பண்றவனு 3 வந்தா மார்க் கொடுப்பான் இல்லைன்னு கொடுக்க மாட்டான் நெக்ஸ்ட் think pa next case nothing is given na Seri, instead of taking 5th question as an example, I'll take the 5th question as a question itself. Emma apdella pogadamma paavamma nanu 28. With this question I'll make you understand the case 5. Grand Hospitality Limited report a net profit after tax of 340. Explanation. Grand Hospitality Limited reported a net profit after tax 3,40,000 rupees for the year ended 31st March 2022. Following is the extract of the balance sheet as at 31st March 22. Wonderful. Inventory given previous year, current year. This will be affected by segment 4. Wonderful. Segment 4. Wonderful.
3.
Segment 3, trade receivable. Segment 3, prepaid expenses. Segment 3, trade payable. Segment 3, provision for taxes given. Nothing I know as of now, so I'm putting 2 arrow mark. Segment 1 will be affected in case of provision for tax. Segment 4 will be affected for tax paid. We have to see. We have to see what the information is given. Depreciation charged on plant and machinery 49,000. Segment 2, depreciation segment 2. Insurance claim received 20,000. Insurance claim received. Extraordinary item. So two places. Segment 1 and segment 5. Then gain on sale of investment. Gain on sale of investment only in segment 2. Gain on sale of investment. Sale panamode, sale value will be added to your investing activity. Gain I will permanently reverse here.
For that 20,000 of non-insurance is given, we assume it's for operating.
Now the question what she's asking is, sir, insurance claim received 20,000 is given. Goods or asset not given. What is the best assumption? So in business, primarily you deal with goods. So you will treat this as goods and it will be affecting your operating activity. Now, gain on sale of investment 8,000 appeared in the P&L for so and so year ended. Calculate the cash flow from operating activity. Now, provision for tax people, open the ledger. Now, please tell me, which case is this? Which case is this? Is it the first case? Second case, opening balance, closing balance is given, no interest on.
Second case.
No information on tax paid and tax provision created. Okay. Second case only, but it has got a different flavor. It is slightly different from second case. What it is, we'll discuss. So please open the provision for tax ledger. Oh, tax paid is not given, huh?
No, sir.
There's one question where advanced tax is coming in that. No, where is it? Donkey fellow. One second, yes, 1 second. Which question is the current question now?
28.
28, huh?
Yes, sir. 29 number ke 30 number ke 31 number ke. Sir, I think 34.
That is 34th question. Okay. So case 5 is 34th question. Anyways, since we started, we'll finish this off. Case 5 is actually 36th question, 34th question. Yeah. No problem. We'll start. We've started this way. We'll finish it off. Calculate cash flow from operating activities. Now, please tell me. Take a fresh page. Net profit before tax and extraordinary item. Working note number 1. Make this working note number 2. One is PFT, no?
Yes, sir.
For PFT, what is given, people? Opening balance is given 19,000, closing is 13. By balance brought on is how much? 19,000. And 2 balance carried on is how much? 13,000. Now there is no information on tax paid in current year provision. In that case, what do we assume? Sir, whatever provision is created in the previous year, that fully it is paid. So 2 bank is how much? 19,000. So technical ledger is closed, but still we have the closing balance. How? Because current year provision created for 13,000 rupees. So now this will go to your segment 4 and this will go to segment 1. Done? Come to net profit before tax and extraordinary item. Working note number 2, calculation of net profit before tax and extraordinary item. What have they given? So profit after tax is given how much? 340. Profit after tax is given. They didn't say profit after tax and after dividend. Means what? Appropriation is not yet done. And there is no information of appropriation also. There is no information on dividend, equity, preference, interim, nothing is given. There is no information on reserves. Nothing is there. So this is profit after tax. Profit after tax. With that, what are we supposed to reverse? Provision and refund, and extraordinary item needs to be reversed. So profit after tax is given how much? 3,40,000. So in this, provision for tax is subtracted. To reverse, we have to add back. Add provision for tax of current year. 13,000. Refund of tax is there? No information on refund. Then extraordinary item. Sir, we have one extraordinary item. 20,000 rupees. This is money received. It is a gain. So it is included in the net profit. Since it is gain, it is included in net profit. But we have to reverse it. We have to reverse it because we want net profit before extraordinary item. Before extraordinary item. So whatever extraordinary item impact is given, that we need to reverse it. So income item earlier added, to cancel I have to give a subtraction. Insurance claim received. How much? 20,000 less. Any other extraordinary item? No. So what is my profit before tax and extraordinary item? 3,33,000. 3,33,000. Now add non-cash and non-operating expenses. Non-cash and non-operating expenses. In that we have depreciation 49,000, depreciation 49,000. Any other item in expenses? No. Then we have less non-cash and non-operating income, which is gain on sale of investment. How much? 8,000. That's all. What is your operating profit before working capital changes?
374.
Operating profit before working capital changes. 3 lakh 3,74,000. Then next is what? Segment 3. Add increase in current liability or decrease in current asset. Now please come back and tell me inventory people. From 72 it has become 69. Increase or decrease? Increase. Decrease in current asset. Trade receivable from 61 to 94. Increase in current asset. Prepaid expenses 3,000 to 14,000. Increase in current asset. Trade payable 78 to 82. Increase in current liability. Provision for tax will come here. No, already taken into consideration. So this will not come. So now, please tell me which is increase in current liability. Increase in current liability, trade payable. Trade payable, how much? 82 minus 78. 82 minus 78, 4,000. Is there any decrease in current asset?
Sir,
Inventories decrease in current asset. 72 minus 69. How much?
3,000.
3,000. That's all. Less what? Decrease in current liability. Increase in current asset. See, always first placement will be current liability placement. How do you remember this? Very simple. In balance sheet, when I prepare the T-shaped balance sheet, first you have current liability, then current asset. So first current liability, second current asset. First will be increase, then decrease. Decrease, then increase. Will you forget this? Any decrease in current liability? No. Any increase in current asset? Yes. Trade receivable and prepaid expenses. Trade receivable and prepaid expenses. Tell me. Trade receivable is how much? 33,000. Then 11,000? 11,000. Okay.
44,000.
So 3,74,000 plus 4,000 plus 3,000 minus 33,000 minus 11,000. How much?
3,37,000.
3,37,000. This is called as cash generated from operations. Then what segment is next? Next. Tax paid. Tax paid is how much? Tax paid is how much? 19,000 is tax paid. Any refund? No. Then extraordinary item? Yes. Add insurance claim received. How much? 20,000 add back. How much total?
3,38,000.
This is called as cash flow from operating activity. Cash flow from operating activity. Is it visible? Which question is this? 29, is it?
28.
This question is 28 now. Any problem in this? We'll see. Thirty-fourth question next. Thirty-fourth question next. In this question, my discussion is going to be limited only to the context of provision for tax. Provision for tax, that case 5 I said, no? Can I do it? In this question, they say that provision for tax. Shh. Provision for tax, this is previous year. First column is current year, second column is previous year. Provision for tax 30,000 for previous year, current year 50,000. Opening balance 30,000, closing balance 50,000. Any problem? Now, come to additional information. Where is it? See this book and that book changing, huh? Question.
35 to 38.
How come? 24 edition only.
And then what is the additional?
It's 35 actually, sorry.
Now it's
In my textbook it is 34. Here it is 35. Maybe they have taken this from the current year edition PDF. My God. Okay, anyways. Guys, sorry, not 34, 35. Sorry. In PDF, it's a different number. Textbook with me is different number. I think this PDF is of 2025 edition. Current edition, what I'm using. But book what I have is 24. 1 second. Okay. Now, same thing, people. Additional information, if you look at 31st March 21, which is previous year. This is current year. Previous year provision for tax is how much? 15,000. Current year provision is how much? 10. 15,000 is opening or closing? You know. 15,000 is opening or closing? Opening. 10,000? Closing. Out of the 4 information, 2 given, which is opening and closing. Now, if you come to the statement of P&L, they are given you the statement of P&L. In that, you have the provision for tax of current year, how much? 50,000 is provision for tax of current year. So, what information is given?
Paid to bank.
Opening balance is given, closing balance given,
Tax paid.
current year provision given. What is not given? No info on tax paid. It's a different scenario. Is it a different scenario? Okay. Now, please tell me, what am I supposed to do? So open the PFT ledger. Open the PFT ledger. What is the balance brought on, people? What is the balance brought down? 15,000 is balance brought down. What is the meaning of this 15,000? Provision created in previous year. Okay. Do you have the provision created in the current year? And P&L how much? 50,000. Provision created in current year. Total is how much? 65,000. What does this mean? This is the total money that you owe to income tax department. You said to income tax department that, sir, I'll give you 15,000 rupees. When did you say this? Last year. Current year, how much you promised? 50,000. Total, how much you promised? 65,000. Now, after the payment, what is the balance that is left to be paid to department? Now you only have to pay 10,000. 10,000 is only the balance to be paid. So how much is paid already? 55,000 rupees is already paid. This is the balancing figure to bank. Any problem? Sir, what is so special about this question? It looks like a very normal question only. No. There's something unique into this. What does it tell me? Okay, others. What is so unique about this question? You paid 55,000 rupees in the current year, whereas the previous year provision is only 15. Out of 55,000 rupees, if 15,000 rupees is only of the previous year amount, current year amount extra, how much did you pay? 40,000 rupees you paid, which is current year's advance tax. Yes. So current year extra money you have paid it. Are you able to follow? So what is my current year's promise? 50. In that, how much you paid? 40. How much is balance? 10. Previous year 15. Full 15 paid. Previous year 15. Full 15 paid. Current year 50 promised. In that 40 paid, 10 not paid. So this is a what you call concept of current year's tax and previous year's tax put together. That is current year's tax means advance tax. So advance tax and previous year tax concept put together, it is coming. Now in this ledger, if you have any problem to digest, let me know now itself. What is bothering you? To bank, I can pay any money, no? Who can stop me? Who called me? Yes. Yes. Now, when I come to segment 4, I'll not be bothered whether the money paid is of current year or previous year. In segment 4, when I minus the tax paid, it is a total tax paid. So this entire 55,000 rupees will be subtracted in your segment 4. And segment 1, what will you consider? 50,000 rupees. That's all. Any problem? Now, this what we discussed is baby provision for tax. Means what? Jujube version of the advanced tax. Now, in schedule 3, you're supposed to create a separate ledger called as advanced tax ledger. Separate ledger. So before I come to that, this understanding is important. This is a PFT ledger plus advanced tax ledger put together I've created. If this you understand, then not now, 2 class down the line. Saturday, Sunday, no, next Monday. I'll be discussing the same provision for tax with advanced tax ledger coming into picture. If you understand this, that will make sense. Tell me what is the problem here. Last year, how much did you promise? 15,000. Current year, how much you promised? 50,000. Total, how much did you promise? 65,000. In that, how much have you paid? 55,000. How much is balance? Only 10. Last year, how much did you promise? 15,000. Current year, how much did you pay? 55,000. Extra you paid. How much extra? 40,000 extra. So what is that extra money of the current year? So out of 50,000 rupees, 40,000 paid. So this is advanced tax. And this is previous year tax paid. Any problem? In segment 4, do I need a bifurcation? Not required. Total how much paid, boss? Total 55 paid. Take to segment 4. Game over. How much provision created in the current year? 50,000. Take it to segment 1. Yes.
Sir, what we pay is more than what we paid in the, what will be the buyer?
She's telling that, sir, instead of paying 40,000 as advance tax, let me say I paid 60,000 rupees as advance tax. 60,000 advance tax you've paid. Now tell me, what is the ledger balance now? 60,000 means how much was the original balance? 40, no, 20,000 increased. So this is going to be 75. Now tell me, what is the closing balance? Will the closing balance come this side? The closing balance will come credit side. How much it is? 10,000. Is it correct? Now balance brought down is coming 10,000. Debit balance means what? Now I am supposed to recover 10,000 back from the income tax department. Say one more time, sir. Okay. 15,000 rupees you're supposed to pay to department previous year. Current year, how much did you promise? 50,000. So how much you promised to pay? 65,000. But you paid how much? 75,000 in total. How much extra did you pay? 10,000 extra you paid. So extra when you pay, you'll get it back, no? Refund, no? Understood. Now in ledger, how to do it? Very simple. Balance brought down 15,000. Current year provision 50,000. Tax paid to bank 75,000. You're supposed to pay only how much? 65,000. But you paid how much? 75. Extra how much? 10,000. When you tally the ledger, value the balance carried on come now. This will be the balance carried on. Why? Because this is provision for tax plus advanced tax ledger. This is exactly equal to, in foundation you studied one topic called as not-for-profit organization. In that we had one account called as subscription account. Same setup is this. Recollect now? How much important is foundation? How much important? Very, very important. Very, very important. Now balance brought on coming which side? Debit side. So what balance is this? Debit balance. This is debit balance. Debit balance means what? This will go to asset side. As what? Advance tax. Means I have to get this money back from department. What is asset? Anything that I have to receive in future from someone is asset. So this was what? Subiksha asked. Correct, no? Clear? Now don't put extra information because this is itself too much loaded. Any doubts? So if I come back to our question, how much is paid here? 55,000 is paid. What is the closing balance?
10,000.
Two balance carried down 10,000. So now this was given in question. This was given in question. This was given in question. So what is the balancing figure? This was the balancing figure 55,000, which will go to your segment 4. This 50,000 to segment 1. That's all. No doubts? Now I'll give you 2 minutes of time for you to finish this question right now. With this, today I'm done with my cash flow from operating activity. That is cash flow from operating activity at baby level done. At inter level, yet to start. What we have done? Only basics. Advanced level is there. She shocked. She's like, sir, idhukku mele irukka? Yeah.
It's advanced. It's current estimate.
Separate ledger you want to create.
Current estimate. Working capital she just 0 to 1,000
Provision for tax. Now, question what she's asking is, so provision for tax is there? No. We are taking in segment 1 and segment 4. Okay. Segment 3, current asset, current liability also change. No. Donkey fellow, one item in one place will give impact. One, you'll give in segment 4, segment 1. And again, in current asset, current liability, one more time will give impact. No.
40,000
You can give the impact of one item in only one place. How can you give in two places? Now, please finish this question. They've given you profit before tax. How much? Negative 1,65,000. Negative 165. Be very careful. Don't think too much. Why? Because in future, advanced tax is going to come. That time you can apply. Today, I'm keeping the concept very simple. If you complicate too much, no, it will be difficult to digest. Today, keep it very simple and plain. Next week, we are going to discuss the same topic again with advanced tax, separate ledger. That time, I'll tell you what needs to be done. All of you have the PDF. Open the PDF in your phone. This is question number 35.
Loss outcome provision.
Very good question. But this is book what now the question what is asking is very true. Sir, already lost, sir. In that way provision created. Can I go and fight with? Can I hold this collar day? என்ன பண்ணேன்னு சொல்லிட்டு அவன் குடுக்குறா நம்ம பண்றோம் அவ்வளவுதான். No, not at all. Provision will never be created in case of loss. But I'm making you do this question only for practice purpose because see. The entire point of view doing this type of question is to make you understand how this entire thing functions. I'm just doing a warm up now. If you're used to this, no, your ICA questions will be very smooth to do it. So now don't put too much brain into it. Sir, when there is a loss, how provision is coming? It is wrong only. Ignore that part and do rest of the question. Because while doing this in the 12th standard, same dialogue I would have told. This is not possible. But since it is given, we are doing it. There's no other option. In this, if you see, this is going to be segment 2. Change in inventory will go to your segment 3. Either you can take the data from here or you can take the data from here. Either ways. Any one place you can take segment 3. Whereas all these are segment 3 only. Provision for tax will come in 2 places. Segment 1, segment 4. So now with net profit, net loss actually this is, you just add the depreciation and leave it. Then come back here and do this. Done? Please tell me what is the net profit before tax and extraordinary item?
Negative 1 lakh.
Negative
1,65,000.
1,65,000. Okay. What is your operating profit before working capital changes?
15,000 minus
Nishi? Operating profit before working capital changes. How much? Didn't do it.
Calculator with this.
In exam also you do in calculator income, okay? The examiner also will award the marks on his calculator. He'll not come to your, what do you call? Mark sheet, Amma.
Negative 65,000.
Negative 65,000. What is that?
Operating.
Operating profit before working capital changes. What is cash generated from operation?
Negative 1 lakh.
Hey, வெறும் 1,12,500 negative difference இருக்கு. Negative how much? 1,12,500. How much is tax paid? Any extraordinary item? No. So what is cash generated from operation or cash used in the operation? Positive, negative? Negative. Cash used in the operation. This does not make sense, but we have no other choice.
Income tax paid 15,000 makes sense.
See, I'll tell you how this is possible. I'll tell you.
Tax, yeah.
Wait. How this is possible? I'll give you logic. If you're asking, no, I'll tell you. Shush, listen. See, in this 55,000 tax what we have paid, see this 55,000 tax paid makes sense. What does not make sense is provision for tax of current year is what we're telling. This makes sense because in this 55,000 what we have paid is 15,000 of previous year and 40,000 rupees is advance tax of current year. See, sometime the business will be profitable in Q1, Q2, Q3. Minute margin profit will be there. In Q4, they have been into heavy losses. Huge losses when I compare to Q1, 2, 3 put together. Q1, 2 and 3 put together, I had a profit of 10 rupees. In Q4, I had a loss of 15 rupees. So how much is my overall loss? 5 rupees. So by the time tax is paid, no boss, on the first 3 quarters, tax is paid. Hence, advance tax is possible. Provision is not possible because when do you create provision? Once you have all the 4 data clear, that time only you create provision. So technically, on the loss, you never create the provision. So what I'm saying is, income tax paid less is okay, correct only. Provision for tax, what they've calculated is not logical, is my point. Provision for tax, when you know there's a loss, you calculate this amount, 50,000 on what? This amount only, no. So the amount is known to you, it is a loss. How can you create a provision? So that is wrong, but tax paid is right because tax paid means what? Outflow of money. How much money I pay to department in total? So why is this wrong? This is right only. 55,000 is 100% right.
We can recover that 40,000.
100%. So can we get that money back? When you file your income tax return, when the government knows you have not earned nothing, so this 40,000 they will process back the refund. Now clear. So technically with this we are done with the preparation of the cash flow from operating activity. So next class I want to spend, let's say 3 solid hours. In that 2 hours is the discussion going on how to prepare the asset account with depreciation. How to prepare the asset account under PFD method and asset disposal account. Right? See, at the intermediate level, I can only revise what we have already studied in foundation. I can't sit and fully teach. If you see depreciation topic in your 11 CBSE and CA foundation, we spend nearly about 15 hours to just understand how to prepare the machinery account under normal method of depreciation. That is net method. We spent good amount of time to understand how to prepare the asset account and PFD account separately. We did multiple questions based on that. And then we spent another time to discuss how to prepare the asset disposal account. I can do a recap of all this, but I can't sit and teach. It's not that I can't sit and teach. I can teach, but will take extra time. I will not have time to complete the original syllabus which is covered in CA intermediate level. Am I loud and clear? So for that, if you're not studying the basics, what are you supposed to do? Go back, ask Harita ma'am for extra classes if required. No, if you feel that by doing self-study revision, I can manage, then by revision you can manage. Those who have already studied with me, this concept should be crystal clear. So you can only go back, take your book, revise, you'll be able to manage. Those who have not studied from me, try to self-revise from wherever you have studied earlier. With that, if that helps, well and good. If not, go back, ask Anita ma'am, please give me the video for depreciation. She'll provide. Accordingly, you can watch the videos to get a grip over the concept if the concept is lacking. If I do revision, in that revision you're able to bounce back the concept. If you're able to get a hold on concept, then no problem. No need to sit and watch any videos. Despite my revision also, you're having a loose grip over the concept. It means that the hold on the concept was never there for you. And you are trying to understand here, but you're slipping away with the revision. I'll be able to follow. So that way we have to go back and refer the video. Am I loud and clear? So probably 1.5 to 2 hours maximum I'll be spending on this concept of asset. In that itself, I'll be doing 1 or 2 questions based on the investing activities. And next 1 hour, I'm planning to do financing activities. That is the target. I don't know how much we'll be able to achieve, but that is the target. That is when Saturday. Sunday, my target is to start working out the ICI questions based on what we have completed so far. Based on what we have completed so far, I'll be doing few questions from ICI module. Almost 60% of the ICI model we can manage, or let's say 50% of ICI model we can manage. Remaining 50% of ICI model pertaining to indirect tax method requires again small topic to be discussed. For example, the advanced tax will come into picture now. In that case, two ledgers, how do we combine together and do it? So all that here and the little bit complicated adjustments of the inter-level that we will discuss separately when the right time comes. Am I loud and clear? So Monday and Tuesday, these are the 2 classes I have planned to complete at least some 6 or 7 questions of indirect method, which is easy one, which can be manageable with the help of the concept that we have learned so far. Am I clear? So maybe direct method we need 1 class, so which could be on not Tuesday. Tuesday will take this only. Thursday, Saturday is required for indirect method, complicated questions. Sunday, direct method, and again next Tuesday, direct method. So max to max, next to next Tuesday, you should be done with this topic. What will be that date? May it will become a 29th of April. Oh my God, this is too much. Any tomorrow is what? Friday, no? Tomorrow morning I have class. Saturday morning I'm not available. Saturday evening we have. Sunday morning anyways we're meeting. Monday is what? Monday you have? Semester is there. Monday evening I can't take it. Tuesday only we have. Next week any holidays like Good Friday as we have this. Every day is holiday. Tomorrow morning I have my foundation class. Huh? Oh, tomorrow again you have test to prepare. No, it's okay. Next week we'll see. I want some extra class to be taken. So my target was by next Saturday, that is 27th. I should be done with 27th. I should be done with this topic. Okay, we'll decide. No problem. Chalo, I'll wind up. Note it down, huh?
Yes, sir.
Sure, before 8 o'clock, 8:37, I will not leave. I left by 7 o'clock itself. Because I have a test to prepare for tomorrow. Chalo, people, that's all from my side for this session. I'll see you all next class. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, people.
Thank you, sir.